why I feel in the face of all the problems in the world impotent, and why I somehow cannot manage to transform I. Now here we get to the real problem, because we're always telling each other that we should be different. Now I'm not going to tell you that tonight. Why not? Because I know you can't. Nor can I. That may sound depressing, but I'll show you it isn't. It's very hard. But everybody, you see, who is at all sensitive and awake to their own problems and human problems is trying to change himself. We know we can't change the world unless we change ourselves. So when we are aware of the ego I, we are aware of this chronic tension inside ourselves. And that's not us. It's a futile tension. So when we get the illusion, the image of ourselves, married to a futile tension, you've got an illusion married to a futility. And then you wonder why I can't do anything.
Good morning, everybody. Today, we actually have a pretty reasonable chance that the parabola is broken. And let's point out as to why this is, at the very least, probable, okay? So, no, this is not just going to be an identification of shapes. We are going to talk about mean reversion pivots and how last night cross actually ended up being a very bearish break for Bitcoin, right? So, the initial typical response to how to chart this would be, a fancy breakout pattern, right? I'm sure if you open up the Trading New Ideas section, you're going to see this chart I'm drawing right next to mine, where we have a flag, a breakout, a retest of the breakout, and now we're going to go Moon Lambo, right? That's the general consensus right now. Look here, even in the bottom right, this little ticker, Bitcoin is apparently set up for a 244% price surge. Bitcoin recovers 5.5%, still bullish. It's sentiment right now. So, let's actually talk about the math, because that's what I care about. The math is more reliable than sentiment or shapes, right? The only ever reason you get something this cleanly painted on Bitcoin, right, like this flag here, is to provide liquidity for the market makers. So, I got a pretty good example of that, right? Where we have super obvious flag patterns like this here, and I'm just going to use the pen tool because I only have to click once. Beautiful. Right, we have a clean breakout, and then Bitcoin does the exact opposite, right? It's a super common occurrence. Prior this week, that was also the prediction, where we would have an upward break from the flag, followed by a rather immediate rejection. And, well, we played that out to the letter so far. So, what matters is the expansion and compression of distributions. right? Currently, our longest overexpanded period, or the period with the most distributional width, is the 220 period, as defined by the 3D Wave PM. Currently, at this time, this period still has excessive distributional width, which means if this period were to enter a state of compression by crossing its 1.25 standard deviation, it would stay in a state of compression until it has shed a sufficient amount of distributional width to cause its re-expansion once again, right? We can just refer to this as potential energy. Once you have, think about it like this. Are you going to be able to drive your car away if you have the pump in your gas tank? No, it's connected and it's fueling, right? So, while you're in the state of fueling the car, you can't really move it without spilling a lot of gas, right? Because sure, you could turn on the car and you could floor it, but you're probably going to cause damage to your car, and you're probably going to lose a lot of the gas in the tank too. And you're probably not going to get very far. Why? Well, because the tank isn't full yet. So, causing the re-expansion of an overexpanded distribution is like that. You're taking out from the gas station, you're wasting time, you're wasting energy, and you still haven't restored the market to a state of potential energy, right? It's not logical to do so unless you have a very good reason to do so, right? Let's say the gas station's on fire and you really need to get out of there. Sure, you can drive away because the reward for doing so is greater than the risk of staying, right? That's a bit more of a rare situation. It happens around 5% of the time. We can actually backtest that kind of information just by looking at regular wave PM, right? If we say, I'm going to choose a random period here, right? Let's, what do you think, guys? Let's use 70. Okay, we're going to use the 70 period. And I still left the 14 visible. Okay, 1 second. There we go. Right, and I chose this arbitrarily just to make a point. Okay? If we go above the red line, we will not go back up above the red line again until we go below the 0.7 value. Right? So, if we tag up here, we go below before we can go back up. Right? Going back up is leaving the gas station before the tank is full. It's not logical. You haven't restored the car to a state of potential energy, and you're going to make a mess, right? So let's just look back on this information, right? Where we have periods of compression, 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 compression. Let's do it a few more times just to prove a point, right? If we're above this red line, we will compress very reasonably, repeatedly, over and over again, because it's very difficult to cause the re-expansion of an overexpanded period. There's not a single time in this chart where this has failed, right? Yeah, let's do one more, just so I can make my point. Oh, okay, here's the failure. We have two failures. One right here, and one right here. Okay? So, in order to be a good trader, all you need to do is find something that works more often than not. Or have a really good profit ratio, one of those two things. But, we could count how many lines I've drawn in just this set, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. And there are 24 wins and 2 losses. Okay, so with this arbitrarily chosen period, I'm sure you can understand the efficacy of this kind of identification. So we are in a state of compression right now of the longest overexpanded period, which is an even more relevant and more accurate signal than what I just showed you. All right, that's significant. So because we are in this state of compression, we will continue to compress, and I'll draw it out for you. Hold on. Right, because currently it's the 220 period. Awesome. right? We will not go back into a state of expansion until we have compressed below the 0.7 value. Simple as that. So that means we will trade laterally as defined by its 1.25 standard deviation. Why? Well, because it's the pivot point for expansion or compression, right? If we have this compression happening right through here, we will not leave the band, at least rather probably. And if we do leave the band, we're going to see a very strong downward force. So if we have a volatility pop to the upside, well, that's good because we're actually provided with secondary entries if that happens, right? Using 1/10th period of the CCI on the 22. Okay? If price were to have a volatility pop to the upside and roll down, I'd be totally okay with that because the mean reversion condition is active, and then the re-entry of the 220 band from above would be a signal for short entry. So shorting right now is moderately risky, right? Think about that. Because you have an active condition, but you don't have a signal. What we're waiting for is a signal. So I have small shorts open right now, but I won't have larger shorts open until we actually get the CCI roll down. Right, and I'm using the Bollinger Band and CCI interchangeably because the CCI is pretty much just the mean absolute deviation representation of the 1.25 standard deviation on a Bollinger Band. Right, it's pretty simple stuff. So it's reasonable to believe the parabola is broken. And there's good profit ratios here too. You know, if we start making significant higher highs, well, that's going to be a whole different game. Right, last time I was this bearish was right here. So, no, just kidding. It was here, this location. Right, this red candle was the last time we had a bearish mean reversion activation. So technically the last time we had this signal, it failed. And it's important to point that out. Because we actually got, oh, actually, no. It was not a failure. Right? Because, I'm sorry, the condition for trend continuation is the return below the 0.7 value. And the longest overexpanded period in this example is 350. And I think you're going to understand why this trade, quote unquote, failed. Or rather, not so much as a failure, but more of a why I stopped out of the position. Okay? So from this previous overexpansion, right, we activated the mean reversion condition, and then the CCI roll down was the signal. That's cool. But what do we know about 3D wave PM? Right? Or rather, what do we know about mean reversion conditions? If it goes back below the 0.7 value, trend continuation can technically resume. So if we change this to 350, okay? Guess what we're going to see, right? When we go above the 0.9 value, trend cannot resume until we dip below the 0.7 value, right there. So guess what happened on this candle right when we went below the 0.7 value? Pretty apparent trend resumption. Now, this was a rather difficult scenario to trade because of how rapidly the parabola came on, excuse me. And yes, in this scenario, that signal was rather late as far as defining compression. And I look at that a lot because it's difficult to see how we could have traded that better. Of course, we could just use quad CCI, which I'll point out to you now. I am also required to point out the bullish scenario for this kind of analysis as well. And it's just called trend analysis quad CCI. Okay? If you have significant period weighting on your higher periods and you have CCI roll-ups on your lower periods, well, those are trend entries. Okay? So at this current time, because even though we have an active mean reversion condition, we also have an upward trend. So at this time, I recommend having contrasting positions, at least slightly, right? Because let's zoom out of this just a bit. Because every time we get a CCI roll up in an upward trend, this one would not have been active. This one would have. Good, 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 good. Right, those are all longs. So we're technically getting a long signal on Bitcoin right now just from looking at trend analysis. And if you used just trend analysis over here, that would have worked out for you just fine. It's just, I wasn't inclined to use trend analysis over here because we're in a bear market and we have seen nothing but compression and compression over and over again. So it was odd to use a tool for a trending market when there wasn't a trend. Well, now we actually have a trending market, so assuming trend continuation is not the most dangerous thing you can do, right? Even though I have signals that imply trend is over, it's important to note there are still on some macro levels you would be betting against trend. Okay, so again, still a higher risk area. You know, I don't really recommend shorting immediately. You know, the condition's active, but you want the CCI roll down for true entry, because that's the lowest risk entry, mind you. And once that's active, well, then we can rather consistently short to this mean here, right? Which is currently at this price, $6,200. So that's pretty far away. I think that's an 18% drop if I'm doing the math right. Nope, I was not doing the math right. That is a 24% drop. Okay. Cool. So you are welcome to take a long here, and you are also welcome to short when the CCI rolls down. Okay. That's about it all I have to say for Bitcoin today. Hope this was useful. I hope I gave a little bit more insight onto mean reversion conditions, but it has been a pleasure. We'll talk to you guys tomorrow at 1 p.m. Very nice, YouTube folks. Let's check the YouTube comments, see what you guys want me to look at. I lost my house keys today, and I'm not sure how much I lost them. I'm so stressed about it. I don't want to have my locks replaced, man. That's expensive. I think I might just leave the country. Unironically, like, I'm kind of tired of just sitting in an apartment. Sure, I go hiking every day, but I'm just gonna sell all my stuff, get a laptop, and be a digital nomad in Thailand. I did some research on, like, the required visa types. And apparently I can do, like, 9-month intervals, and then, not 9-month, 90-day intervals, and then leave the country and then come back in, which is weird, but you can do like 6-month stays with no problem. Of course, I could always just tour Southeast Asia. Okay, rant aside, how do I use other CCI values beside 14? That's a really hard question. Do you use the other CCI values besides the 14? Or how do I use them? Okay, you know, this is kind of like me giving you the answer to Algebra questions, and then you just asked me to show my work. And then you asked me to teach you how to do it too. Changing periods. Oh man. It's quite the rabbit hole you want me to go down. I guess I could just give you the basics of what a CCI is. CCI, the 0 value is the mean. The 100 value would be the 1.25 standard deviation for that period on a Bollinger Band, and then the negative 100 value would be the bottom 1.25. Right? Changing the period just changes the period length of the mean itself. And one thing you can do is just use really high periods for trend analysis. Like, if you are below the negative 100 on the 200 period, you're in a downward trend. And if you're above the 200 period, that's an upward trend. It's a lagging signal, but it's a lot more reliable of a trend indication than a lot of the typical signals you can get. And then there's buffering zones by using the 50 period CCI, and the 100 period can be used as a take profit signal when you're having a downward cross from the 14. It gets really intense. It's the best oscillator in my opinion. I highly recommend it. Craig White says Binance and Tether funds women in slavery. I just thought I would read that headline to you because it was funny. Anyway, if you want to learn more about CCI, I can super recommend the course that I teach. Essentially, it's a 7-hour course of just me talking about Bollinger Bands. Right? Everything on this chart is just a derivative of a Bollinger Band. I use nothing but volatility theory. Like, that's it. I don't do fundamental analysis. I don't have a single indicator on my chart that isn't just a derivative of a Bollinger Band. I mean, so mostly just look at the 14 for most of the analysis. Dude. Okay. CCI is only really going to measure positioning for you. All right, if you're below the bottom 1.25 standard deviation of, right, you're in a downward trend, but only as defined by the 14 period. And then really your expansion and compression is only going to be defined by, okay. So one thing I can recommend is the quad CCI, or CCI with Wave PM, because it actually filters the signals based on mass, because CCI regularly is just a very noisy indicator, but you can actually filter the signals based on overexpansions for far more accurate results, and you can just change the periods. Like, watch this. If you change both of these values to, I'm going to arbitrarily choose 80. And let's do the 1 hour chart. All right, you can get some really good counter trend signals here. Like this here would be a short where it highlights everything in red for you based on overexpansions, which filters out a lot of the signals and makes them a lot more reliable. So like this here would be a long, and this here would be a long. So if you just want some cookie cutter signals that are enhanced, like this here would be a short, and this here would be a short. Honestly, I should just make a bot that trades this because it's really reliable. And this would be a long. That would be a short. Yeah, hey, Kat, if you're watching this, can we make a bot that just trades this? And we could probably sell it. Because looking at this, it's pretty ridiculous just how effective this is. This one would have failed. That was a losing trade. Like, honestly, this is really good. Anyway, we sell this indicator for like $12 a month. So definitely consider looking into this. The link to the website's in the bottom edge of the page. Video description, that's what I meant to say. Robin asks, what does it mean when you say 1/10 period CCI roll down entry, changing the standard 14 to 22 in the current case, and check the crossing down to positive 100? Great question. because we're getting a compressing range as defined by our longest over expanded period, using a static oscillator in order to capture entry would be inefficient, right? So by changing the oscillator period to be a fraction of the longest over expanded period, you can gain entry into the compression with a relative size, or rather a normalized distance, or shoot. A normalized frequency. I think that's what I want to say. Right, think about it in like terms of a sine wave. Okay. If we have, I'm gonna drag ourselves over the right side of the chart here. If we have, frequency was the right word, cool. Right, let's say we have a tiny little compression here versus a very large compression here, okay? Looking at our sine wave. Okay, apparently I can't adjust it after I drop it. Okay, so when we're in a tiny little compression like so, right, you want a higher frequency in the oscillation because you don't have as much time in the compressing range, right? Where this would be short, this would be short, this would be short, and this would be short. But if you're doing so in a huge compressing range, right, you're going to be getting too many entries, too noisy of signals, and they're not really going to be that accurate of swing highs. So if you're in a higher or a larger compressing range, you want a wider oscillation because they're going to be providing higher swing highs and lower swing lows based on that compression. Whereas if you're using this larger compression, say in this tiny compressing range, well, you're not even going to get a single signal, right? Dominic says, this strategy works well in hindsight, but not really well in real-life trading because to get it reliable, you have to wait for a candle close, and that candle is usually most of the move you draw the arrow on. Of course, everyone can try to make it work. Don't want to discourage, just from my experience. Are you just using the indicators, or did you take the course? Because there's a lot of variation, especially with the CCI rolls. And using the 3.2 standard deviations to gain entry, you know, you're right. The conditions appear to be super accurate, and they are, but they don't provide immediate entries. Waiting for the CCI rolls is a lot better. And typically on the live streams, I just stick to compression trading. And obviously, if you're trading a compressing range, you're going to be getting, well, a less volatile move, right? Whereas, like I teach in the course, there's a lot more dealing with expansion trading as well. But the thing with expansion trading is it's extremely time sensitive. Mean version trading is not, right? If you have a compressing range, you're gonna stay in the compressing range. Simple as that. But if you're trying or attempting to trade expansion, you need to enter this signal as soon as it fires. And if I'm trying to run a call service, I can't have, you know, and I get a call at 3 a.m. and somebody wakes up and the trade is already completed, right? So the reason I am so hard set on pushing mean reversion trades is because they are slow, consistently profitable, albeit smaller trades, right? It requires a lot less finesse than a lot of the other methods. But that's a pretty good point. I actually agree with you on that on some extent. There's a lot of finesse, Dominic. You know, what you said is part of the big reason why I change the terminology from conditions, or from everything was just a signal in the past, but I changed it to conditions and signals because of the required finesse. However, there is more that isn't really public yet. Let's go ahead and take a look at ACAT. There we go. And I'm going to load a secondary chart layout as well. Just give me a second. Oh, that's good. There's a lot more to this than I typically make public. Because you can actually define compressing ranges and volatility overhead as well to give you far superior entries. Right, like this mean reversion condition here is really clean. Right, instead of using CCI rolls to gain entry into the mean reversion, you can use the extremities as defined by volatility overhead. And that's going to be far more reliable. You can use the compressing ranges very effectively. Right, oh no, I didn't want to do that. Take a look at the 15-minute chart just for funs. Couch Chart says, I think the biggest key to make things work in most cases is to take longer TF trend trades on shorter TF entries. I have to read that again. I just kind of said it without thinking about it. Absolutely. Yep. I'm only talking about the specific CCI plus wave PM scalp strategy. Or, oh, yeah. Okay. No, there we go. I totally agree with you. Oh, we actually have an active mean reversion condition here, don't we? Oof. Oh, great, I broke it. Come on. There we go. And give me the third. Yeah, Kat, I need to use this more often. Okay, I actually skipped a lot of comments. Snake says, hey, do you have any connection with someone inside? You know what I mean? They're cracking down on people and tracking them. Do you know anything? I know things, but not because people told them to me. No, I'm not an insider, and I don't know any insiders. SPX and NDX both about to close weekly candles inside the pivots for mean reversion. Oh, are you talking about a macro level economy crash? That's exciting. I'm very interested in that. Dude, having normalized extreme values is really nice. Let's check out SPX, okay? Actually, I prefer this ticker. I guess we can check the weekly first. Oh boy! That's gonna be big, man. Tell me what you're seeing on the daily, mate. I agree with you on the macro level mean reversion. Like, this could be... Oh, God. I think the economy's about to crash, guys. My father's trying to sell his house. Oh, God damn it. He's not getting any showings. Better sell his house quick, my God. It stresses me out so much. Wow, you guys haven't asked me like a single day. Okay, yeah, I don't have normalized value on there. That makes sense. Oh God, I have allergies. I don't think I have set to the right values. I do, okay. Kind of cool. The longest over expanded period on the weekly chart is still the 200. Yeah. Things are about to get bloody, cat. Does not bode well. Okay, I'm going to check the comments one last time. Wouldn't be surprised if we hit a bit of a range in June. I'd like to see the generated mass from this downward move here, because that compression is going to be somewhat reliable. So, I'll wait on it. Oh yeah. If I recall correctly, you said this was interesting, right? Be interesting if it was the... Ooh. Okay. I'll do a quick check on XRP and then I'll be on my way. I mean, really, it's a weekly level trade. You're betting that the weekly is going to do well. Because of that, you can just have to sit on your ass and wait. There's not much point in doing smaller time frame analysis. You know, there's buying pressure. Most people are long. And I think the majority is going to be right this time around. Don't have that large position right now because, you know, it's going to be a volatile range and you're going to draw down maybe 20%. 10%. Well, yeah, 20% is right. Because if you make a lower low, you're going to be screwed. Just don't overexpose yourself on this kind of position. Okay. I'm gonna make one change here, just out of personal preference. So I define volatility overhead differently than cat. Although I do need to load up the ACAT tracker. I'm probably gonna make a duplicate of this chart template and save it, because I'm putting work into this. Well, you know, I think I'm gonna do this. Hold on. If anyone who has the indicators wants to like copy my chart layout here, you're more than welcome. It's gonna take a while to compile. Okay, I wasn't kidding when I said that. I'm gonna make a burrito. While this loads, I'll be right back. Okay, we still have not loaded. Jesus. We want to do 0.7, second and third. Okay. Okay, well that loads. I'll be flipping my burrito over. Ay. My God, it's still loading. Jesus. I mean, I'm loading the Half Revolution version, so in theory it should at least work a little bit. Bring to front. There we go. Except ugh. What have I done? Okay, well, I'm going to put a lot more time into this, so I will talk to you all tomorrow, same time, 1 p.m. Have a beautiful day.